All right, how are you guys doing? So let's break this straight down, starting with the daily time frame. So I think if as you remember that what we've been looking at after this massive candle close right here, I think if as you remember that we had this 150 pip drop to the downside, price nicely reached back into this monthly fair value gaps consequent encroachment right here, and it's been acting as a really sensitive area for quite some time. We have one rejection, another rejection, not a single body of the candle closing below it, and another spike right into this area. So overall we have this very sensitive, right, as support type of a zone right here. So once price very aggressively spiked into it, opening on this day right here, notice that this body of this candle right here, of Monday's candle, notice that it closed above, and overall just rejecting this daily BPR as well. That's also been on our radars for quite some time, so that's really great to see. So taking this trade right here on Tuesday, this was the candle that we opened our long positions. So overall, after seeing another massive run on the downside and price starting to climb to the upside, what comes to lower time frames, some execution time frames, we had a good idea that we could see another rejection daily type of a candle, which is exactly what we wanted to see overall, because I think you guys remember that this whole vision right here, what we've been looking at is this bigger daily time frame bear trap type of a formation, trading towards the monthly bearish fair value gap slow right here. So overall, it's really great that we had this bullish close right here, and we've been expecting for a possible close like that to take place after this massive wick rejecting monthly bullish fair value gaps consequent encroachment. So overall, that was that. Still regarding stage vigor in a neutral zone overall, because we didn't have this candle closed yet. They had this massive wick, so we didn't really know what's about to happen on Tuesday right here. Price really just could have started slowly crawling to the downside around here and only then shoot to the upside, as well as obviously could have started climbing to the upside, rejecting this BPR area right away, and that's exactly what happened here on Tuesday. So regarding daily time frame, again, in the morning we didn't have a clear daily stage, so we were in our scalp trading environment. So now focusing on the lower time frames, this is what we had here. After this massive run to the downside overall, I think you guys can see that we had this pretty clear bearish order flow kicking in right here. Price then gave this massive SIBI candle and this overall 150 pips drop to the downside. After that, we have during Asia range some tiny SMQ divergence right here. And after that, price just really started climbing to the upside from that point, leaving this low. Then it rallies higher, leaves a fair value gap, rejects it, shoots to the upside, leaves another low. Then it gives another fair value gap rejection, giving another low. So overall, what it started doing was just simply building this bullish lower time frame or the flow right here against this whole bearish momentum that we saw here. So now opening on Tuesday, without daily stage, what we started looking for right away is, do we have clear targets to aim for? So obviously we had these equal highs right here regarding the previous day's highs. And again, I'm talking about the New York time zone, the New York previous day's highs. So it was a very clear buy side liquidity level at 1.03513 right here. So on Tuesday morning, looking back on Monday, we had this bullish order flow already in place. So what we expected for price to do is firstly to at least reach above Asia range highs, because in this area right here, in this rough area on the dollar, we have a gap. So as you guys know, it usually acts as a vacuum area, as a magnet, and pulls price higher. Price did exactly that. It reached into it. We had this tiny BPR right here. Notice that price ended up rejecting that area after reaching into daily time frame gap as well. And here it started pulling back right into this bullish 1 hour fair value gap. So again, this started stacking confidence from that point regarding this whole pullback and where it's pulling back. So if we focus on all of these 3 consecutive down close candles, what we have here is another confidence factor for us to trust this potential zone right here for price to key off of and end up taking out this fake high right here that stopped right below our main draw on liquidity for today. So dropping back to the 15-minute time frame to see even more details right here. This whole green rectangle is our 1 hour bullish fair value gap, and what we have here, as mentioned, right in the middle of this rectangle right here, around this area, we have a gap on the XI magnet. So you can see that price went slightly above it, but didn't fully take out this high right here, our main draw, and ended up pulling back into 1 hour bullish beta race. We also had here on the 15-minute time frame this fair value gap right here as well. Obviously, ideally, we wanted to see it reach into the lower quadrant right here and maybe even into this order block right here. But and at the end of the day, we still had a fair value gap here on the 15-minute time frame as well. So we had a clear flats right from the 1 hour time frame to the 15-minute time frame. Right at the beginning of the New York kill zone, price started settling down inside of this confluence area and started pushing higher. At first, what we wanted to see, if we focus on this specific part right here, once price started pulling back, what I was seeing at first was a potential quick bull trap because we had this tiny bearish fair value gap. So as you guys know, before price actually gives a clear rejection, a clear run, pretty often what we see are traps. So what I was seeing at first is price actually rejecting it, this bearish fair value gap, taking out this low right here, and only then starting to build to the upside, ideally even leaving an RT low right here. But that didn't happen, and how we knew that it's not going to take place is after this bullish expansion happened, leaving a bullish fair value gap. So in other words, we fully engulfed this bearish fair value gap with clear momentum. This low ended up being first half of the near kill zone low. Not ideal, especially when it was looking like just a simple consolidation on the execution timeframes, but overall from that point entering that near kill zone RT window, what we had was this bullish fair value gap now on the 15-minute time frame. This whole institutional order flow entry drill type of looking development right here. Price left an imbalance, a middle candle right here pointing at potential continuation. Then with this candle, price drops right into the fair value gap and continues higher. So overall, at that point, we not only had this near kill zone early low formed right here already rejecting lower time frame P race, he had this bearish fair value gap that was a negative fully engulfed now by this candle right here. So by this point, what we had here was a positive confluence factor, a clear 15-minute bullish fair value gap, and we were already trading right here inside of the RT window. So all the pullbacks obviously during this higher volume time hold a bit more weight. So that was ideal for us. So the only and the main negative that was standing in the way from that point was the 10 a.m. red folder dollar news. But again, they still had enough time to squeeze a trade right here. And that's exactly what happened. So now going to the execution timeframes. So now this is what I was talking about. This is the 7 a.m. right here, this gray area. And this area marks the start of the RT window right here. So this gap right here is from 7 a.m. to 8 a.m. As you guys know, pretty often we don't see clear formations during that time. And this was exactly that situation. We saw quite a lot of liquidity being built up right here in this area. Looking higher, we have buy-side liquidity and a bearish 15-minute fair value gap above. So again, what we expected was for price to go higher, running buy-side liquidity, then run this sell-side liquidity, and only then start pushing to the upside during the RT window. But obviously, not always we will have absolute perfection. But what comes to RT window, we actually did have quite a lot of confluence. Good thing is that at least we had some SMT right here, price right at the beginning of the RT window. You can see this is 8 a.m. candle right here. It started pushing with fast momentum. We had this whole expansion right here, and price started pulling back into newly formed 15-minute bullish fair value gap right here. Remember that this bearish fair value gap was already engulfed by that point. So when price started pulling back into the 15-minute bullish fair value gap on the execution timeframes, and I personally started focusing on the 2 minutes right here, what we saw at that point is price pulling back. It slightly ran this low by less than 1 pip, but what we had on top of that, adding to the basket of confluence factors, we had this bullish SMT right here between these structures. And now at this point, what price was doing, it was forming a low with SMT from a lower time frame P ray in the main direction, moving towards the main drawn liquidity during the RT window at this point. And this was taking place at 8:40 a.m. So that was great. After that, on the 2-minute time frame, I simply waited for more. So price gave this expansion to the upside. It wasn't significant. It wasn't huge or anything. So I wasn't entering right from this fair value gap. Personally, I wanted for price to actually show reactions and rejections, and it happened. You can see that we had this pretty clear rejection candle right here, and when it closed and started pushing to the upside in this leg, I just entered my trade manually because I simply had from that point enough confirmations regarding this RT window low, regarding this rejection. So I was convinced that from this point, execution timeframe order flow is about to kick in to ride it towards our main drawn liquidity right here. Regarding this trade, the management was just super simple. When price rallied higher right here with this expansion, taking out all of this low resistance buy side liquidity marked right here when it blasted to the upside. This is where I fully removed my risk, moving stop loss to break even right here. And after that, just let the trade run, not taking any partials or anything because we didn't have any major levels. It was a pretty clear scalp trade with a very clear MACD area main drawn liquidity. So I basically just let this trade run. And shortly after, literally just 4 minutes after, price fully reached our final target right here. And that was that. So the only pain after the entry that we faced was this tiny pullback right here. But despite that, from this point, you can see that it was just literally a straight pop right to the target. Now, regarding the last target for those who wanted to stretch their positions, as mentioned in the morning, we had this high of this 15-minute CB candle right here. So you can see how price reached into it and gave this pretty huge reaction to the downside. So I personally, again, didn't stretch my targets towards this level. I was fully out once price took out this buy side liquidity right here near previous day's highs, completing this tiny bimodal fractal right here. This being sell side of the curve, this being buy side of the curve, of course, having a very weird looking execution time frame reversal here. So this is exactly why we were patient and waiting to see if the RT window is going to give us clarity or not. And as you can see, it did give us enough clarity to enter this position and jump on this quick run towards these buy side liquidity pools. So that is all for this breakdown. Don't really have anything else to add to this. I hope it was insightful and we will talk very soon. Take care, guys.